Good afternoon and welcome to BizTech's Asian Midday Market Watch. It's Wednesday, the 20th of October, and we have as our guest today Kian, CEO of Astral Asset Management, coming to us out of Singapore. Kian, as always, great to have you on the show.
Good afternoon.
Now, Kian, Jerome Powell said that inflation is still too high and would require lower economic growth. So we have T-bills that are now above the 5% mark for the first time in 16 years. What are your thoughts on this, and how should we react as investors?
I think I've mentioned in several times on this show that investors and the market will really need to have the mental preparations that interest rates is going to stay much higher for a much longer period. And as events have turned out in the recent weeks, when there's a potential war in Israel, expanding to the rest of the Middle East, there's a lot of concern that oil prices will surge as a result of this war, and rising energy prices obviously would add more fuel to inflations. And even the current inflation numbers look well under control. But as you can see, if the energy prices continue to increase, it will definitely add more pressures to the inflation side. And as the central bankers of United States as well as Europe and other countries, they are all watching out for any signs of inflation coming back. So I think they are going to put their foot on the pedal for some more months to make sure that interest rate is high enough and inflation remains under control.
So this is a worry, isn't it, on several fronts? And the first thing is, if you're old enough, you will remember the 70s, and this ugly specter of stagflation seems to be looming ahead of us.
Right. There are a lot of similarities between the events in 1970s and the current situation. Unfortunately, current situation could be even worse because we are talking about two war fronts, one in Ukraine, Russia, and the other one in the Middle East. High energy prices is definitely a key factor, in driving up inflationary prices and prices. And the central banks, I think, of these days are more prudent, as in they do not want to repeat the mistake they made in 1970s, where they increased the interest rate rapidly and then after that, try to bring it down, and that resulted in a whole decade loss due to high inflation.
Now, Kian, the other worrying thing is, particularly for emerging markets and in Southeast Asia, is the spread between US interest rates and domestic interest rates. So and particularly markets like Malaysia and Indonesia, and of course Japan as well. Malaysia, for example, experienced the lowest rate of its ringgit against the US dollar, I think in 26 years or something like that. So do you think that there's going to be a shift in policy from central banks across the region?
I think in the era of turbulence, as we have seen, the preference is for investors and the market to move, their assets and their funds into safe havens. So US dollar has been the predominant, currency whenever turbulence of the world emerge, and emerging markets have always been suffering the shorter end of the stick. I think what's important to remind ourselves is the situation could be very different from what we witnessed during the Asia financial crisis, because ASEAN in particular have now much more controlled and limited exposure to US dollar debts. I mean, what you mentioned about the currency exchange rates, the ultimate impact on businesses is when they have to repay the money they borrowed in US dollars, suddenly they have to repay much more, with reference to their local currencies. I think after the Asian financial crisis, ASEAN in particular has learned from this lesson. And what we're going to see is, much more controlled, way of managing the crisis by the central banks this time around.
And that's a very, very good point that I think is missed among a lot of people. The fact that we are not as exposed to US dollar dominated bonds and borrowings compared to the period of the Asian financial crisis. But yet, for a lot of these economies, your imports are basically in US dollars. So if you look at another inflation spike that's happening, and that's really in food prices. Do you think that would be the tipping point, perhaps, in terms of the inflation story in the region?
I think that the central bankers and the politicians are sometimes their hands are pretty tight. If they try to increase the interest rate too fast in the local currencies, that will also add more pressures to the own business. and the burden of their own citizens, be it home loans or car loans, etc. So
and that's a political problem, not just an economic problem, isn't it?
That's correct. So politicians are fully aware of this, and if they want to be elected in the next office, so on and so forth, their hands are pretty tight, and they have to tread along a very fine line between balancing the import-export stories, the exchange rates, as well as the interest rates that their citizens have to face.
Now, Kian Soon, on that note, thank you very much for your insights. Thanks for coming on the show.
Most welcome.
Now, we've been speaking to Lee Kian Soon, CEO of Astral Asset Management, coming to us out of Singapore. This has been BizTech's Asian Midday Market Watch. I'm Brian Fernandez. This show will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.